that set of values, those skill sets, that sort of steely discipline, if you like, will serve Vietnam quite well in the current environment.
Hello and welcome to MoneyWeek Talks. I'm Cris Sholto Heaton. I'm a contributing editor for MoneyWeek, and my guest today is Dominic Scriven, who is the founder and chair of Dragon Capital, the largest asset manager in Vietnam. Dominic is an extremely persuasive and enthusiastic advocate for Vietnam, as anybody who went to the MoneyWeek Wealth Summit last November will know. And we're delighted to have him back with us today to talk about how Vietnam's progressing, the challenges ahead, and what the outlook is for the market. Dominic, thank you very much. Thank you for joining us. Great to see you again.
Thank you, Cris. Thank you, MoneyWeek, and welcome to all of your audience. It's a great pleasure to be here. It's the special day. It's the first. It's the first working day of the year of the fire horse. So, can I also wish you and all of your listeners a very happy year, prosperous year ahead, or as we say, Chúc mừng năm mới.
Thank you, Dominic. Happy year of the fire horse to you as well. We'll talk about what the future holds and what this year should hopefully bring shortly. But when talking about Vietnam, it's probably useful to go back into the past a bit and talk about how you got to Vietnam and what you've seen over the past 30 or so years. So tell us, what took you to Vietnam in the first place? I believe you were a broker, a banker originally, weren't you?
Yeah, it's a combination of, of coincidence and accident and a little bit of desire. I was a fund manager and then a broker, and I ended up in Hong Kong. And then I was in my 20s, late 20s, but in my 20s. And when you're in your 20s, you have a bit more adventure in you, don't you, when you're in your 60s? And I visited Vietnam with a bunch of other fund managers and brokers, actually, in 1990. And we drove from one end of the country to the other, subliminally aware, I think all of us, that Vietnam had somehow featured in our upbringing, because those of us who, were educated in the 70s and the 80s probably have Vietnam in their cultural experience in the West, even though many had not visited. But to the point, there was Vietnam in 1990, friendless, really. Its only friend was the Soviet Union, and the Soviet Union, as we know, was imploding. There had really just been a nasty border conflict with China, which was only just over. And ASEAN, which was founded in 1976, really driven by fear of Vietnam, was also not very friendly. And there was this country in the middle of the most dynamic region in the world, East Asia, Southeast Asia. And it was a question of great curiosity as to why this was the case. Added to which, Vietnam was certainly an extremely attractive, whether you talk about the history or the landscapes or the cuisine, or obviously the people, a very attractive place. And I suppose the last part, sorry, this is a long answer, but the last part,
it's a good answer.
You can cut. The last part was I wanted to learn the language. I wanted to learn a tonal language. I'd worked for a few years. I didn't want to do a master's, but I wanted to stretch a brain. And there was no better way than learning a tonal language. Tonal language is being important because the meaning of a word is depicted by a picture. So it's a fundamentally different linguistic approach to the way that a thought becomes a sound. And Vietnam, despite using the Roman alphabet now, introduced by the Jesuits, actually is a tonal language, and ancient Vietnamese people might still know characters. And so I wanted to learn the tone. So I was a student in Hanoi University for 2 years, and boy, was that a fantastic part of my life.
So how did the language lessons then turn into Dragon Capital?
Well, I was very enamored at the end. I mean, I finished my studies because there was nothing more to study, basically. Not that I knew everything, but the textbooks had run out. And I was running out of money. And I wanted a job, and there were no jobs in Hanoi. So I went to Ho Chi Minh City, the south, and got a sort of half job with somebody, but it didn't really work. And so within 6 months, I had got together with some mates and thought, okay, what are we going to do? We do the only thing we knew how to do, which is invest. And Vietnam, of course, didn't have any stock markets then, but there was a credible case that in 1994, a market would have been opened in 1995 or 1996. So we thought, well, why don't we? And of course, in 1994, let's remember that America removed its trade embargo. Prior to 1994, there was a trade embargo, which is essentially America saying we're still not at peace. And I think they had an agreement I can't remember when, but it was big. But anyway, in 1994, this trade embargo was moved. So it became no longer a criminal activity to be an American doing business. And there was a big uprush of enthusiasm for people who thought they could do things. And so it was quite a positive environment. And we thought we'd launch a fund. And then we thought the stock market would open, and then we thought we'd list everything, and then we thought we'd retire and go to the beach. Boom. Didn't happen, of course, but Asian crisis got in the way. But that's how Dragon started, was a few of us getting together to do the only thing we really felt we could do, which was to start a fund. And the initial fund was small. It was big enough for us in those days to be very pleased. It was $16 million. These days, I don't suppose you could start a business with a fund like that, but we could then. And we set about investing it. And of course, the markets weren't. I mean, our whole thesis was predicated on Vietnam and capital markets, and has been throughout the life of Dragon. But they were delayed because of the Asian crisis until 2000. So we had like 4 years of trying not to lose money and learning, which was a very useful, it wasn't profitable, but it was a very useful, like, university period in learning about how business worked and Vietnamese people do business with each other, and how the interaction between regulation and policy and government and business culture interact.
And obviously, by being there so early, I think it's probably fair to say you've played a significant role in helping to develop Vietnam's markets from the outset.
Well, I mean, you know, when I consider that after 30 years, Vietnam is still not an emerging market, I sort of feel we haven't really done our job, right? I think there's still a long way ahead in the development of Vietnam and as the Vietnamese investment story. But I suppose, you know, if one were to look backwards and go, well, there was no market, and now there's a market of $350 billion, turnover of $1.5 billion, $2 billion a day, that feels like a distance has been traveled. And it's a great pleasure to have been, it's a great personal pleasure to have been part of that. And I think it's great for Dragon to have been part of that. Yes, I wouldn't say, you know, we've necessarily driven it, but we've been part of it, yes.
And obviously Vietnam, I suppose, burst onto the kind of international investment scene, I'd say probably in the mid-2000s, really, wasn't it? You know, MoneyWeek first began writing about it in, I think it was probably 2004, 2005-ish. There were a number of Vietnam funds listing in London at the time, and people started paying attention all of a sudden.
With your usual superb timing, of course. I think the trigger that you might have been leading up to was Vietnam joining WTO, which, you know, is in the way that economies used to, I don't know if it's true now, but in the way that economies used to mark their graduation, WTO was part of it, wasn't it? It was like, welcome to the club. This is how we play the game. These are the rules. You subscribe to them. You know, things like the 1957 New York whatever it's called, on enforcing foreign judgments in your own country, stuff like that. And yes, of course, and it was also, of course, propitious, if we remember, 2005, the Greenspan put, 2006, 7, boom, 2008, and all of that as well. And so a lot of capital was flowing, both responsibly and irresponsibly around the world, I think, and that might be also part of what you're alluding to.
Because over the 20 years since then, it hasn't been smooth sailing. There have been a lot of ups and downs, but it's in a very different position to where it was when we were. I can't remember when we first met, but probably in that kind of time frame
ago. Would have been around then, yes.
Exactly.
Yes.
And it's a very different market. A lot has changed. So it's probably a good point to jump ahead to today and say, okay, Vietnam benefited by entering the WTO, developed a lot economically in that time. Now it's a very different world. It's a world in which trade barriers are being thrown up much more. There is much more fragmentation. There is much more opposition. So when you look at the economy today, what gives you so much optimism that things will continue to progress as well as they have done? Not necessarily in a straight line, not necessarily smoothly, but you've got a vision for the future.
That's a very good question, and I imagine all of us spend a lot of time, facing that. I think live this weekend, with tariffs being ruled illegal on Friday, and tariffs being raised to 15% on Sunday. It's a strange, fast changing world, and probably a confusing world for countries trying to interact and engage at the relatively early stage. The confidence that I would have, and I have had always, I think, with possible exception of 1 year, which is 1999, I always had a great deal of confidence in the ability of the Vietnamese as a people to get things done. And I would say in the same breath that I would never try and second guess timing, but I've always, and I think the whole thing about Dragon is we've always felt we understand the story, the thesis that the Vietnamese themselves have cast. And you could say that, well, in political terms, Vietnam is an autocracy. Whatever, there's other words for it, but basically I would say autocracy. And the social contract in Vietnam is, look, don't make too much noise, and we will deliver growth. And so that's part of the very fabric that underpins social cohesion. And it fits neatly into Confucianism, actually, coincidentally or not, I don't know, which is, of course, the past of so much of East Asia. And that gives a direction that inspires and guides, I think, everybody who's in Vietnam, including foreign actors, foreign economic actors, as well as, of course, the domestic private sector and youth and the aged and et cetera, and the ability to execute on this path is, I think, what marks out Vietnam. I could say with regard to some of its peers, yes. And I think that set of values, those skill sets, that sort of steely discipline, if you like, will serve Vietnam quite well in the current environment. Now, more prosaically, what does that mean? Well, Vietnam hasn't yet signed a trade agreement with the United States. Vietnam is a massive exporter to the United States. It's a massive importer from China. And those numbers got even more massive in 2025 after 2024. And so there's a little bit of a tension, right? So, what happened last week, Vietnam's Lunar New Year, when everybody should be at home with their families, is the General Secretary, also the President, the head of state of Vietnam, was in New York, tiptoeing around President Trump's Board of Peace and trying to pursue the trade negotiations. in the midst of those two really stark opposing moments on Friday and Sunday. And I think the Vietnamese will probably be not entirely comfortable, but this will not be new ground to them, the way of engaging transactionally and getting things done.
And I think it's clear that policy and governance has been very important in Vietnam. I think, as we said, there have been some ups and downs, but policymakers have been good about learning from mistakes, adapting to circumstances, adjusting and changing. Now, if we look back a couple of years or so ago, there was a bit of a wobble in terms of how foreign investors perceive Vietnam as a result of the burning furnace anti-corruption campaign. The sense that the governance was becoming a bit less pro-business, a bit more unpredictable, and geopolitically perhaps tracking towards China, both in terms of the way that it's governed and also where geopolitical loyalties lay. Now, I think people feel more optimistic about that now. I'm assuming you would probably say that the concerns were always a bit overstated, but from talking to investors, do you think worries about that have passed?
Yeah, you refer there to the burning furnace, Vietnam's mini equivalent of President Xi's Tigers and Flies campaign. Without going too deeply into history, this was Vietnam's political reaction to the explosions of the GFC and the mismanagement that occurred throughout the banking sector and state enterprises in particular. And it started as a, shakedown of business abuse, of abuse in the business sector, principally the business sector, but financial, regulatory sectors. But it then emerged, as these things sometimes do, it then evolved into it sort of began to feed on itself. And I think one of the lessons of developing economies is the law of unintended consequence. The law of unintended consequences runs riot where you lack the formal institutional structures that are so much more present in developed economies. And one thinks back to just last Friday, right? Supreme Court, versus the president, that evidence, if you like, of the strength of institutions. And Vietnam, like other countries in similar situations, doesn't have that. So we didn't have that sort of natural institutional breaking point. And this campaign, this burning furnace campaign, began to affect confidence. And I think it was really the current prime minister who realised that, and maybe the general secretary who then became, came into prominence after that. And I think they realised that it had gone too far, and so they have spent since 2020 time to try and boil all on troubled waters and rebalance things. So you refer to the bumpiness. Yes, I mean, if I suppose on this sort of talk one should mention investment returns and the fact that the past is no guide to the future, of course. But our original fund we launched in 1995. Since the stock market started in 2000, returns have been between 11.5%, 12% annualized in dollars. And what that shows is over a long period of time, dependable returns can be dependable, above average returns, I'd say, can be earned. But to your point, these returns can be quite volatile because of the lack of guardrails and the law of unintended consequences. I think to move things to now where we are today, I think there's a new, what's that, step in the stride, a new sense of energy that has picked up Vietnam since 2023. Yeah.
One of the things that we're hearing policymakers saying now is essentially the pursuit of national champions, larger business groups that can help to move the economy forward, which has a lot of positive things to say for it. But again, anybody who's been invested for 20 or so years will remember what happened in the late 2000s, early 2010s, when quite a lot of money and backing went into groups like Venetian that didn't really play out very well. So when it comes to lessons learned from past mistakes, is there kind of reason for optimism that the same issues won't arise this time and this will genuinely lift up the economy?
Yeah, very good to point that out. I mean, I think, since I would say modern Vietnam began in the late 80s, mid-80s, 1986 actually, specifically, renovation, with reforms to the agricultural sector, hand land back to the farmers, very obvious textbook, and it was extremely successful. Then the country moved to the foreign invested sector, export, which is an Asian model, well tried and tested, and again, they've been surprisingly successful at that. Then, to pick up the point you refer to, they turned to state capitalism, and that was a big disaster. The misallocation of capital, lack of accountability, bad decision making had a very significant economic cost and political cost, actually, led specifically and directly to the Burning Furnace campaign. And so state capitalism has been very much dialed back in the last 10 years. And I think what we're seeing now is a focus on the private sector. Which is quite right. Why not? You've done farmers, the foreigners, the state doesn't work. Who's left? Well, actually, the private sector is the biggest part of the economy. So it's quite logical to turn to that. And I think, I don't want to overplay the references here, but I think Vietnam's probably got at least one eye on Korea's development path with its chaebols, with both the pluses and the minuses and the lessons learned there. And I think when we talk about Vietnam's private sector, what do we mean? Well, there are 500,000 joint stock companies, as we call them, legal entities, and there are 5 million households. So the 5 million households, actually, in terms of job creation and activity at the margin, is really the bedrock. It's the bedrock, and so there's been policies put in place to formalise what is informal private sector activity. And that, I'm not sure that that's actually going to ramp up growth per se, but it's going to make the economy larger, as happens is often the case when you bring, so I think like 1 to 2 percentage points of GDP a year are sort of underwritten with the formalization of informal activity. But the champion bit that you refer to, Cris, is really the 500,000 big companies, and where I think that the aspiration is 20 to 30 international names that can compete outside the grounds of Vietnam. And of course we've had our own questions about that in the past as investors. Which are the companies, which are the industries, which are the brands that are going to allow Vietnam to expand beyond its borders, rather than the not just a simple banh mi loaf of bread, which I'm sure many of your audience have enjoyed here in London. But what are they? So we're beginning to see two that come to mind: Vietjet. VJC listed company, run by a woman, very successful, Vietnam's most successful businesswoman, is large, low-cost carrier and is beginning to impact the definition of low-cost carriers in the Asian region, in Southeast Asia. And so I think you can see that beginning to happen. The other one, of course, which some of your audience may know, is VinFast, which VinFast is still not a profitable company. I want to say that one for the start. But after, what are we now? Is it 8-year journey, starting with combustion engines, moving swiftly into electric vehicles? Vietnam now has a manufacturer of electric vehicles that's got a base in Vietnam. It's Indonesia, India, Philippines, Didn't work in the US, but there's maybe sub-reasons for that. But basically, beginning to build up market share as an affordable electric vehicle that's not made in China. And this may turn out to be another successful brand. Yeah, I think there is some sort of older, established, there's beverage companies and dairy companies, those sort of things. There's materials companies. We have a very prominent steel company called Huafat, which I think may has capacity to develop rather like POSCO in Korea, South Korean steel giant, one of the top. Huafat is one of the top 20 steel companies in the world already. Yeah, but the interesting thing about all of these is that they're not state enterprises; they are all private companies. And in Vietnam, we still have this this notion that to be successful is glorious, and we know that because every 3 months, Forbes produce their list of billion and trillion and trillionaires, and there's a list of, I think it's now 6 or it might be 7 Vietnamese billionaires who are trumpeted through the media very proudly. Everybody's very proud of these people, and they're all private sector business people, and they've all done it themselves. It's not through appropriation of state assets. It's through building businesses themselves. And I think this is when Vietnam talks about champions, it means building this population, building this. What are the lessons learned? What do they need? They need bigger, they need more support from government. They need to be offered opportunities to take on things that the public sector had previously done for itself, like building an airport, for example. Yeah. So it's a very exciting time.
And that brings us nicely onto the capital markets side of things and what you're doing, what you're looking for. Because, in market terms, Vietnam is quite an unusual market because it's still, until recently it was classified as a frontier market across the board. Now FTSE have reclassified it as an emerging market with effect from last year. It's still a frontier market as far as MSCI are concerned. However, compared to a lot of other emerging markets, Vietnam is it's a broader, it's a deeper, it's a more liquid market with a lot of choice, isn't it?
Yeah, that's very true. It's been, as I mentioned earlier, we've been there 30 years and Vietnam still isn't an emerging market. It feels like a little bit like, what was that all about? But you are absolutely correct that on a lot of numbers and metrics, Vietnam is an emerging market. And I think if I think through, the client base that I know, that people who invest with us, I think many of them are effectively treating Vietnam as an emerging market. But I would equally say that for a lot of people, because Vietnam is not an emerging market in an emerging market index, it becomes quite difficult. So our audience of investors, for example, includes, we have sovereign wealth funds who are so large that they need to diversify everywhere they can. We have a lot of family offices where, which are not constrained by investing in line with indices. And we have a lot of people who visit Vietnam and get they get it. They cross the street. They find out how difficult it is to cross the street with the rhythm of the traffic and the noise and the energy levels, and they get it and they come back. But there's this sort of conventional, and I don't mean that word impolitely, but I mean is the more traditional investing institutions, pensions, that sort of thing, still find Vietnam a difficult market to invest in because it's not part of the index. And as you rightly alluded, Cris, that the two players in town are FTSE Russell and MSCI, and I think there are some others, but basically FTSE Russell said Vietnam will be in their emerging market index in September, so long as certain thing happens by the end of March. And we believe that those certain things are happening. Most tellingly, the allowing of omnibus accounts, so people can invest in Vietnam through their global brokers and don't need to go all the way to Vietnam and fill out the forms and triplicate and wet inks and all of that stuff. They don't have to do that, and I think that was, perhaps the term there. But the biggest slice of cake in emerging market indices is, of course, MSCI, and that we still don't know there. But I think that will require Vietnam to execute on its plans for a central clearing party, and therefore remove the need for pre-funding trades by foreign investors, which is a source of some irritation to some people, I believe. And that will be, it's, they're talking about the CCP next year, but trying to pull it into this year.
So do you think realistically we're looking at a time frame of a handful of years before it might get MSCI emerging status, or are we probably looking at a longer term project in terms of market development?
No, I think a handful of years is the right term. And I'd be very reluctant to be drawn on date because we've been drawn wrongly so many times. But last year was a very important year. It was 50 years of modern Vietnam, 50 years of modern unified Vietnam, and led to this strong call from the leadership of Vietnam to basically be proud and be ambitious. And get stuck in, it's a very telling message that came from the leadership, and so every part of every entity in Vietnam has been working out what it can do, and within the capital markets, no question, what their deliverable is, it's to become an emerging market, in all senses. And you can see that what they've done. It's true in the Ministry of Finance, it's true in the central bank. Which has historically not been that friendly to the capital markets. And it's true within our direct regulator, the Securities Commission. They understand what they need to do. They understand these things. It's no longer enough to say, but we're Vietnam, we're different. They know what's at stake, and they know what they have to do. So I think it's really a question of technical execution. There might be some ideological questions that, that maybe not everybody in the structure finds comfortable, but essentially I think it's a question of execution. And so, the headline Vietnamese aspiration is for growth rates to increase towards 10% a year. You can't just flick a switch and do that, right? But move to that higher level of growth. And I think if we are not there by 2030, then people will feel, this is a government, an administration, a political structure that's been elected into power in 2026 with a 5-year term, which will end in 2030. And so the term of this administration is going to be judged, go back to that point about the social contract, in whether it can deliver an acceleration in growth and all that is necessary for that to happen. And the role of capital markets is critical in that space, because the other learning from long ago, you talked about learnings, is that banks can't fund long-term investments. Even more so in developing countries where people have their money on deposit, for 3 months. Right, that's it. So you can't take 3 months' money and lend it for 30 years or 20 years. So they know they've got to develop the capital markets. And that's actually a related, so we've talked about emerging markets, but if I could say that there's a corollary that's interesting for us as investors in Vietnam, which is the growth, the stimulation that comes from the domestic investor market. Think pensions, saving schemes, tax incentives, all that sort of stuff. Yeah.
Well, this is absolutely crucial, because what a lot of emerging markets lack is the development of the domestic deep capital markets that mean that you are not reliant on foreign flows. We talk a lot about the benefits of adding to international indices, but it's worth pointing out, of course, that if you're a foreign investor, you can go and gain exposure to Vietnam already through Dragon funds and through a number of other funds. The opportunity is there. But if money is flowing in and out all the time, that's actually a problem for the strength of the local capital markets. So what needs to happen is this development of a domestic investment culture focused on equity. Now, if we talk about Vietnam specifically, at the moment, how do most people still save? What do most institutions still do? I believe gold is still very popular with retail investors.
Yes. So, ironically, last year the US dollar appears to have peaked out, and most currencies around the world appear to have strengthened against the dollar. Of course, Vietnam is sort of a bit of an exception. I think we were down 2% against the dollar last year. One of the reasons is the strength of gold, because at a household level, for many, many years, and I'm going back, 50 years ago, Vietnam was in a terribly parlous state. And people didn't know what the currency was and who was in charge of the currency and what the currency represented, what are the promises that are made. Social contract wasn't clearly identified. And so people put their wealth in dollars and they put their wealth in gold. But of course, gold doesn't get wet. and so nobody really knows, but we have estimates of $200 billion worth of gold in the household economy and under the bed. That's twice the level of Vietnam's foreign exchange reserves. I mean, the number is somewhat colossal. Yeah, and so people will put their money in gold. They also put their money in crypto, although that's less of an interesting trade in the last few months. But the hope has to be that markets will develop on their own and maybe backed by appropriate policies, as increasingly a place to to manage people's wealth. And I think you see this in every country. When markets start, first of all, they're perceived as a casino. I wouldn't go there. But then over time, and then people think, oh well, look, you can make money, so they start investing, and sometimes they're successful, and sometimes they're not. But over time, they generally develop the realization that actually you probably need professional help in managing your wealth to stop it eroding. You don't necessarily want it. You can't double it every day forever, but you want to stop it eroding. Wealth management, security, preservation of capital. That's the point when proper savings schemes and institutions can begin to mobilize. So within Dragon, we've had a local platform for a few years now. We have an app and we have a domestic outreach program. I think we're now we're getting about not quite 1,000 investors a week, new investors, but it's very gratifying to see people beginning to engage, and you can it's tied up with the way people are thinking about their lives. You've got people who are breaking out from the 3-generation living. They may be in relationships, maybe they're married, maybe they've got an apartment. There may be a bit of a mortgage there. That's a new thing. Independent life, travel. You can see this happening, and it's quite uplifting to see that in our business. How you talked early on about change in Vietnam. This is a big change. It's a big change. People developing financial independence.
One of the things we've seen in a couple of emerging markets over the last few years is the successful development of a domestic investing culture. India's done very, very well in encouraging money that used to be in gold into the market. China has also, I think, from a policy perspective recently, been trying to increase the domestic retail investment component of markets versus speculative short-term trading. Does Vietnam, from a policy perspective, also aim to do the same thing, or is what you're seeing in terms of people coming onto your platform purely people organically saying, hey, I want to be involved in investing in the future of the country in this way because I'm optimistic?
Asian markets in general, if I can generalize, are much younger than European markets, right? We've had markets in Europe for hundreds of years. The notion of pooling capital and sharing risks is much newer in Asia. And Vietnam, of course, is newer than the rest of Asia, right? So I have a lot of sympathy for the fact that it's, if somebody comes along and says, invest in this piece of paper, except it's not really a piece of paper because, dematerialized it. You've just got an account number, and it's dependent. The safety of your investment is dependent on people behaving in certain ways and delivering certain. It takes some time before people can develop a knowledge and a comfort about that. But it does happen. And in fact, we've done studies, and in one of our decks, we used to track. We had I don't know why we don't have it now, actually, but it's very relevant. Track GDP per capita in Taiwan with participation in markets in Taiwan. And Vietnam is doing exactly the same, and so did Thailand, and so did Korea. And there is a rough consensus that when GDP per capita gets to above 5, but before $10,000 a person a year, then people cease to be concerned about having their savings in a bank where they can see which they can get tomorrow, and they begin to diversify through, insurance and savings, and they begin to think about pensions and, those sort of types of allocation of capital. And of course that comes about at the same time as banks become full of deposits because of the growth of the economy, and so deposit rates decline. Now we still have positive real interest rates in Vietnam at the moment. Inflation's 3.5% and you get 6% on deposit. So people are quite happy to put their money in the bank. But that's down from 8, 9, and people can see rates coming down. So I think you've got that, and that's a push factor as well as the pull factor. And you can see people beginning. So where I live is Ho Chi Minh City, Saigon. GDP per capita is north of 10,000 because of the disparities throughout the country. And so you can very easily see that in that market, which is 15 million people, there's a clear demographic that is beginning to save, invest monthly. Do we have monthly investment schemes? What we lack, I don't mean us just in Dragon, but I think what Vietnam lacks is the regulatory push that can come through these incentive schemes. So you talked about India, for example. Savings, SIPs as they're called, were enormously successful in India, weren't they? And one thinks, pension fund legislation in Thailand. There's bubbling, the cauldron's bubbling with these ideas. I think what people are most focused on is tax incentives, personal income tax incentives to become long-term investors. We don't have those yet, but I think we will. Specifically in pensions, there is a scheme, and that's actually just being doubled at the moment. The exemptions are being doubled. So you can see the cauldron bubbling with these ideas, but we'll have to wait until one actually is pulled out.
You can't talk about any topic these days without talking about AI. And in the case of Vietnam and the economy, it'd be quite interesting to hear what sort of feelings you pick up about this, because at the moment, India, obviously the hot story for many years, there's considerable angst about what this means for the software and services industry and whether India can compete as an independent AI power or whether it's actually going to undermine quite a bit of it, that development story. In Vietnam, how are people looking at AI? Are they saying this is a way of building the economy or of adding new strengths? Do they think it's largely irrelevant to what Vietnam is doing at the moment, or are they worried about it?
The Vietnamese population is young. So we talk about the demographics, favourable, blah, 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 favourable demographics. It is a young population, savvy, tech savvy. People are very quick to catch on to digitalisation and new ways of doing things. And there's certainly no fear. I would say there's no fear of AI. There's a great deal of interest in how it can be applied, and that's through to is visible in the approach by government to digitalization and tokenization in financial market terms. There's a lot of dialogue going on there at the moment. In terms of, I talk in terms of our own company. Our CEO is mid-40s, Vietnamese. His first policy prescription was that everybody had to get comfortable with AI, and we're using AI obviously on a daily basis as part of our investment process, and I think we have quite a high degree of confidence that we'll be able to be much more productive, possibly lower headcount, but certainly more productive is the key in a lot of the core parts of an investment management business. More generally, in Vietnam, in a macro sense, we have not yet identified vast areas of GDP, if you like, which can be excised, cannibalized, or smothered through the use of AI. Vietnam is manufacturing. Yes, robotics are great, of sure, but that's a trend that pre-existed AI. More prosaically, I had a due diligence visit to an institution this morning, and one of their questions to me was about the trade allocation. So if you have a number of different clients, 1, 2, 3, and you're executing in the markets on behalf of 1, 2, 3 clients, how do you make sure that clients 1, 2, 3 are treated equally and fairly? And I was having a discussion with a director yesterday, and we agreed that AI could not replace human judgment in trade allocations. It can simplify the process, right? It can make it more, it can make it quicker, create records. But when it actually comes down to interpreting what is a fair trade allocation, no. Having said that, on the other side of our business, I think we face a lot of risks. Yes, in traditional investment management. Yes, I think that is but that's probably for the benefit of future Vietnamese generations, which was your question.
Our last question, something totally different. Vietnam and Dragon Capital has been your life's work, really, but you do have a business interest outside of Dragon, which is that you have more than one, I think, interests in tourism, in holiday resorts. You're also interested in sustainability, biodiversity, the environment. Could you talk a bit about that? Bringing those two things together, what's your focus been here?
Thank you for asking that, Cris. I appreciate that. I don't think of it really as so much of a separation as, different aspects of one's personal journey. And I'm very lucky that my colleagues in Dragon, share, we have a lot of common understandings and common interests. I mean, one of which would be biodiversity. So, the whole ESG space, governance is you don't get out of bed without being an expert in governance and investment. Climate is obviously a huge issue, but we made a particular slant towards biodiversity, and there is a Dragon Capital chair in biodiversity economics at Exeter University, whose professor has been tasked with answering the question: how can markets price the absence of birdsong? Not the presence of birdsong, of course, because you would buy a bird, but how can markets price the absence of birdsong, which is both a real question, a literal question, but also a more metaphorical question about how can markets play a role in rebalancing growth or economic activity that's fallen out of sync, out of balance, and out of kilter. And I'm afraid to say, after 6.5 years, the professor has not yet answered the question. But that also flows through into other areas which are a bit less Dragon and more me. I mean, being in nice places, which means nice environments, maybe close to nature, engaging in communities, having a different view when you wake up in the morning to the one that's outside the office. These are things which I've long had an interest in, and I've been sort of lucky to fall into small resorts in out of way places, all of which benefit from some environmental richness and being close to nature in various ways. So there's one in Vietnam on a beach.
We should name check them, actually.
Am I allowed to mention?
Yes, please do.
Mango Bay Phuquoc.com, Malabar Hill Sri Lanka.com, Ozen.bt in Bhutan, and Simpang Forest Lodge, the most recent, in Cambodia. Yeah, and they all they broadly touch around an interest in the natural world, for sure. I mean, two of them we have primate species that live on the property. One of them is in a very large wildlife sanctuary that we look after with wild cattle and crocodiles just close to the bungalows, and the other one is in the national park in the Himalayas in Bhutan. So yes, and I'm very fortunate. And I would advise any of your audience thinking of becoming major investors in the tourism industry to think rather carefully, because it's a very long-term business, but it's also a fun business, of course, as well.
It's also a tricky industry in terms of sustainability and development, isn't it? Because it's very easy for a country that pursues tourism as a source of growth to end up stuck in relatively low-value jobs, to end up as a source of foreign currency earnings, but something that doesn't really help you in terms of advancing up the value chain. You also have this problem of what does it do to the local environment, the local culture, that kind of thing, which are all quite big challenges.
Yeah, I think I'm not nearly intelligent or knowledgeable enough to really tackle this one in a confident way. It's a really interesting question, isn't it? I mean, if the headlines the last 12, 24 months have been that tourism globally around the world is red hot. And from Barcelona to Kyoto and Athens, people are local populations are reacting badly to the fact that visitors pouring through the door it's making their lives intolerable. And of course, one has to be, it's not just one location. One has to be very aware of that and why is the case. What are the reasons for that? And I think that's still quite new. But the other aspects you refer to are longer dated, aren't they? They've been more studied over a longer period of time. I'm the resort interests I have are in underdeveloped countries, all of them. And I'm very conscious of how positive it can be for a family member to lock into a fixed salary. And I think of all the things I've learned about developing countries, it's the improvement in the quality of life that comes when people don't know where their next salary input is going to come from to when they do know. Because when you know that on the 25th of every month you're going to get, even if it's not a very big salary, you're going to get paid, it changes your psychology. It gives comfort to your family. It allows you to plan. And given that tourism is one of the few industries that can actually survive, it's got a business model that stands up in remote and areas, developing countries. I think that on its own is a huge, huge supporter. But of course, it's not just about paying people a salary. It's about trying to be responsible in the impact that you have. In the longest resort that I've been involved in is the one in Vietnam, Mango Bay, and we have a great general manager there who's spent many years trying to deplasticize the supply chain, and it's been a very trying journey because, of course, all your suppliers provide stuff in plastic. We're quite close to succeeding. But it's been quite a negotiation, and there's, economic implications because you end up paying more, both on the way in and the way out and stuff. But and also, it's not something that we've really had much traction with our customer base. I found that people, you say we don't use I'm not sure it would make people pay more for a room. I don't know. So, I think there are many different angles to it, but I would stress the enormous benefit that one can bring to a community through the introduction of a wage that people know they're going to get.
An important stepping stone for progress overall. Which I imagine that over 30 years in Vietnam and seeing how the economy has grown since then, there's a lot that you've kind of taken in terms of seeing that security play out and the opportunities it creates.
Yeah, I think what is the definition of civilization? I know that's for another conversation, isn't it? Yes, it's been frankly a really great journey, and I hope that it will, and believe it will continue to be. I think Vietnam's a good spot in its maturation phase. I think other countries are beginning to wake up to that, and of course, you've alluded to the volatile geopolitical environment in which we now live, and if I have optimism, one of the pieces of optimism is about the growing role that middle power countries can play. Of course, we're sitting in a middle power country ourselves at the moment, but I'm really talking more about, the populations of 100 to 200 million people. It's quite a lot of countries, but 100 to 200 million people. And they haven't really featured in the G7 or the G2 or the G20. G20 maybe was an attempt to try and get there, but it's been slightly defanged, the G20, hasn't it? But I can see these countries sort of coming together, developing more of is it a global South dialogue, whatever it is. I think Vietnam is definitely qualified to be one of those. And I think more to the point, Vietnam actually really wants to be part of that. It's the 21st century, yeah. Good luck, Vietnam.
Dominic, that's a great note to end on. Thank you very much. I'm conscious we've already run over time, I suspect, but it's so fascinating to hear you talk about it again. Thank you very much. I'm conscious before we leave that we've talked about your tourism business, but we haven't actually cited Dragon Capital's main London vehicle for investors here, which many MoneyWeek readers will be aware of already because they've been following us for so long. But Vietnam Enterprise Investments Limited, the investment trust, is the largest, although not the only, London-listed Vietnam fund. Dragoncapital.com is the URL for Dragon Capital. What's the URL for the...
veil.uk. Thank you very much, Cris. Thank you, MoneyWeek. Thank you all. Yes, please do have a look at Vail.
Thank you very much, Dominic. And thank you for listening. If you haven't already done so, don't forget to subscribe to the podcast and please leave us a review as well. And if you'd like to know more about MoneyWeek magazine, you can get 6 free issues by going to moneyweek.com. Thank you. See you next time.